Hey, what's up guys? Welcome back to Smart Wallet and Me, where financial wisdom matters. In today's video, I want to talk about another company in China that deals with Tencent. I'm sure you guys have heard about Tencent, but today I'm going to do a little bit of an analysis on their stock and about their company and give you my breakdown and my opinion. So let's get right into it. Guys, I just wanted to give you a quick breakdown of what Tencent is. It is the world's largest video game vendor, as well as one of the most financially valuable companies. It is among the largest social media, venture capital, and investment corporations. Its services include social network, music, web portals, e-commerce, mobile games, internet services, payment systems, smartphones, and multiplayer online games. They're very well diverse and very well diversified in this market in the fintech world with the financial technology. Offerings in China include the instant messengers Tencent QQ and WeChat, and one of the largest web portals QQ.com. It also owns the majority of global's music services, Tencent Music Entertainment, with more than 700 million active users and 120 million paying subscribers. The company surpassed the market value of $500 billion in 2018, becoming the first Asian technology company to cross this valuation mark. It has since then emerged as one of Asia's most valuable companies and among the world's top technology companies by market value. Tencent has been credited as one of the world's most innovative companies by the Boston Consulting Group and Fast Company, respectively. So guys, as you can see here on Yahoo Finance, Tencent Holdings Limited, with the ticker symbol TCEHY, is currently trading at $76.58, and it's up about 4.47%. And we can see that the 50-day moving average is around 71.10 and the 200-day moving average is around 60.98. So it is trading right above those levels currently, according to the one-day interval chart. The RSI strength is at 55. The money flow is around 46, which is right in the dead center, in my opinion, based on the 20 range being oversold and above 80 being overbought. And also the momentum is at around 4. So guys, I want to bring to your attention this one article that I read from Bloomberg Technology, where the article says that Tencent climbs after reassurances on China's internet clampdown. As most of you know, this last week has been a big drop for a lot of the fintech companies, especially for Alibaba and JD.com, because of the antitrust monopoly regulations that were put on them, and based on also Jack Ma's response. But it looks like Tencent Holdings has risen more than 2% after reassuring investors about an antitrust crackdown by Chinese regulators, and the most extensive public remarks by any of the country's major technology companies since proposed regulations hammered their stocks this week. President Martin Lau provided the company's best assessment of a regulatory paper released just 2 days earlier, after Tencent reported 29% revenue growth in the third quarter from a COVID-era boom in gaming demand. He explained the WeChat operator supports the government's goals of fair competition, and its social media and entertainment empire operates within the competitive fields. He also made clear the company will comply with regulators' policies. Now that was a very good news for the regulators, because it showed that he was more willing to cooperate and comply with the regulations compared to what Jack Ma's statement was, where he said that you guys have a pawn shop mentality. So there's two leaders here with two different messages. One was being more against the Communist Party and the banking regulators, and one was more compliant and willing to cooperate with them. And as you can see here, based on his comments, the stock has traded up and it is going higher because of those comments of Tencent, whereas Alibaba is currently trading at 258.33 and it is down 2.26%. The antitrust rules that were to curb monopolistic practices across its internet landscape almost wiped out $290 billion off the value of market leaders from Tencent to Alibaba Group over these last 2 days. That followed new regulations governing the fintech sector that torpedoed the highly anticipated IPO of Jack Ma's Ant Group. So guys, going back to this article where Lau says that such regulation is not new and it's also not unique to China, Lau said, rapidly expounding on 5 points he said he wanted to emphasize. As technology companies become bigger and more important to the economy, I would say more regulations do reflect the new realities needed. It's not just the case for China, it's also the case globally. So he's actually welcoming this entire antitrust and anti-monopolistic environment, and he's welcoming this regulations. That is a very sweet sound to these regulators because that's what they really want. So if this continues, if Tencent is able to deliver on their promises, then they probably won't clamp down as hard as they did with Alibaba, especially because there was another news article that came out that the president of China actually personally wanted to clamp down on Alibaba. The government remains supportive of the internet and innovation, Lau stressed. Tencent embraces the philosophy of competition to the point, he added, that multiple internal teams compete against each other in new fields, what's been dubbed its shark womb philosophy. The regulations threaten to end a Chinese ecosystem long protected from competition by the likes of Google and Facebook Inc. So now they're trying to compete against Facebook and Google, and it's now dominated by Alibaba and Tencent through a labyrinth network of investment that encompasses the majority of the country's startups in areas from AI to fresh veggies and digital finance. Here's a chart that I want to show you guys of these 5 companies: Alibaba, Tencent, Meituan, Xiaomi, and JD.com. You can see here that Alibaba went down very fast, and these other 4 companies have risen up because they are cooperating more than Alibaba is. The envisioned antitrust rules tend to focus more on transaction-based platforms than on Tencent's entertainment businesses, Lau said on the call. The draft's language suggests a heavy focus on online commerce, from forced exclusive arrangements with merchants known as pick one of two to algorithm-based prices favoring new users. The regulations specifically warn against selling at below cost to weed out rivals. They're basically trying to weed out any other competitor by selling products below their cost so that they can bring in more customers and get the market from all these other smaller companies where their profit margins are very, very small. For them to say that must mean they've had some assurances, Bloomberg intelligence analyst Wei Cernling said. The other point that is very true is that online games and digital entertainment should be much less impacted. And check this out. Tencent reported sales rose to 125.45 billion won, or 18.9 billion in the 3 months ended September, beating forecast. The world's largest gaming company reported net income of 38.5 billion won, surpassing projections of 30.3 billion won after it recorded a gain of 11.6 billion won from rising valuations for its tech holdings. Online game revenues grew 45%, the fastest pace since 2017, and I think that was also pushed higher because of the new lockdowns that were put in place in March of this year in 2020, allowing more people to play games in their homes while they were on lockdown. While social network revenues increased 29% after the consolidation of game streaming giant Huya. Games were way ahead of expectations. This is important as it is the most profitable part of the business within Tencent. Here's another chart I want to show you guys where the ratio of Tencent share price versus Alibaba share price. You can see that the Tencent stock has actually outperformed Alibaba, rising about a 2.3 ratio compared to Alibaba. The divergence on the surface may seem confusing. Beijing's latest move to regulate big tech was on full display this week after issuing new guidelines to curtail monopolistic practices. Again, just to reiterate, on Thursday, shares of Shenzhen-based Tencent were boosted after management reassured analysts about its ability to manage the risks of an antitrust crackdown by Chinese regulators. From the regulatory perspective, the concern for Tencent has eased as it started some time ago already. From the regulatory perspective, the concern for Tencent has eased as it started some time ago already, while Alibaba is facing scrutiny on Ant now. So guys, let me know what you think about this. If you think that Tencent is currently a good play here based on these prices, or do you think that they may have more scrutiny coming down the pipeline and the president is just throwing out some false assurances to the regulators? Please leave your comments down below. I would love to hear from you guys. And also, please don't forget to give me a thumbs up. I appreciate all of you guys out there. And please like this video. Please share it with other people, and I'll see you guys in the next video. Thanks for watching.